When it comes to building wealth, two investment options often dominate the conversation: real estate and the stock market. Both have proven to be lucrative avenues for investors, but they each come with their unique set of advantages and challenges. Real estate, with its tangible assets, offers the potential for steady cash flow, property appreciation, and tax advantages. On the other hand, the stock market, with its fast-paced and liquid nature, can generate high returns through dividends, capital gains, and compound interest. However, the question remains: which of these two powerful investment options can truly make you richer in the long run? In this video, we'll compare the pros and cons of both real estate and the stock market, taking into account factors like risk, liquidity, return potential, and accessibility to help you decide which path is right for your financial future. Whether you're a seasoned investor or a beginner, the choice between real estate and stocks is one that can shape your financial destiny. Real estate versus stock market. In 2010, John Carter, a real estate enthusiast from Los Angeles, decided to invest in a rental property. He had heard countless success stories of people amassing wealth through real estate, and he believed in its power to generate steady cash flow. John's first property, bought for $150,000, appreciated over the years and now boasts a value of $350,000. Meanwhile, Emily Davis, a stock market investor from New York City, began her journey in 2012 by investing in diversified stocks. Her portfolio started small but grew rapidly, thanks to her strategic investments in tech companies. By 2022, Emily's initial $20,000 investment had turned into an $80,000 value, driven by market booms. The contrast between John and Emily's investment paths highlights the key question. Real estate offers long-term stability, while the stock market promises rapid gains. Which of these two paths is truly the best for building wealth? Both routes can make you rich, but it depends on your risk appetite and financial goals. Is real estate still a goldmine, or is the stock market your better bet? In 2015, Michael Johnson, a seasoned real estate investor from Miami, purchased a duplex property for $250,000. After renting it out for several years, he now enjoys a passive income of about $3,000 a month. Over the years, the property has appreciated in value, and Michael's net worth has steadily increased, thanks to his investment. On the flip side, Sarah Lee, a stock investor from Chicago, started investing in index funds in 2016, with an initial investment of $15,000. By 2020, Sarah's portfolio had grown to $40,000, thanks to the booming stock market. Her returns were faster and more volatile compared to Michael's real estate path, but they provided her with a significant wealth boost in just a few years. While real estate offers stability and physical assets, stocks provide the opportunity for rapid gains. The key to success lies in balancing risk and reward, and each investor's journey shows that both paths can lead to substantial wealth, depending on strategy and timing. The million-dollar question. In 2014, David Williams, a tech entrepreneur from San Francisco, decided to invest in the stock market, starting with a modest $10,000. By 2020, he saw his investment grow to an impressive $70,000 as he focused on high-growth tech stocks. His success was fueled by the rapid rise of companies like Tesla and Amazon, which he had bought into early. However, David's strategy wasn't without risk, as stock prices are often volatile and can change dramatically. Conversely, Lindsay Moore, a financial planner from Austin, Texas, invested in real estate back in 2012. She bought a property for $200,000, and through strategic renovations and renting it out, she not only gained equity, but now has a steady cash flow of $2,500 a month. Her property's value has doubled over the years, and it continues to appreciate steadily. While the stock market offers the chance for faster returns, real estate remains a long-term wealth builder. Both paths have their merits, but it ultimately depends on your personal financial goals and tolerance for risk. Stock market or property. In 2018, Tom Harris, a marketing executive from Seattle, invested his savings in a real estate property worth $500,000. He purchased a small apartment building, rented it out, and within 5 years, the property appreciated to $700,000. Additionally, he receives a monthly rental income of $4,000. The passive income allowed Tom to reinvest and scale his real estate portfolio, creating a consistent wealth-building strategy. Meanwhile, Rachel Adams, a young investor from Los Angeles, opted for the stock market in 2019. She started by investing $25,000 in a diversified mix of stocks, focusing on growth sectors like renewable energy and technology. By 2022, her portfolio had grown to $60,000, boosted by the explosive growth of companies like NVIDIA and Microsoft. However, Rachel's investments also experienced market downturns, which meant she had to be more actively involved in managing her portfolio. Both strategies proved successful, but the key takeaway is that real estate offers stable, long-term wealth, while stocks offer opportunities for faster growth, but with higher risk. The right choice depends on your risk tolerance and how hands-on you want to be with your investment. Unveiling the truth. In 2016, Kevin Brooks, a businessman from Chicago, invested in real estate, purchasing a property for $300,000. Over the years, he collected rent and watched the property's value appreciate. By 2021, Kevin's property was valued at $450,000, providing him with both equity growth and a steady monthly rental income of $2,500. For Kevin, real estate became a source of long-term, hands-off wealth generation, allowing him to focus on other business ventures while his properties worked for him. In contrast, Nina Williams, an investor from Boston, took a different approach by diving into the stock market. She started investing $10,000 in 2020, focusing on stocks with high dividends and growth potential. By 2023, Nina's portfolio was worth $40,000. She benefited from quick gains during strong market rallies, but also faced significant drops during downturns. While both investments can create wealth, real estate is typically considered more stable, with passive income and appreciation, while the stock market offers higher potential for rapid returns, albeit with more risk. The real question is, which aligns best with your financial goals and risk tolerance? How to become rich? Building wealth is a common goal, but the path to getting there can vary greatly depending on your choice of investment. Real estate and the stock market are two of the most popular routes, but they come with distinct advantages and challenges. Real estate, with its potential for passive income, property appreciation, and tax benefits, can be an attractive option for those looking for stability and long-term growth. However, it requires significant capital upfront and can involve a lot of hands-on management. On the other hand, the stock market offers the possibility of high returns with relatively lower initial investment, but it comes with a higher level of risk and volatility. So how do you choose between the two? In this debate, we'll weigh the pros and cons, highlighting real-world examples and key strategies that can help you decide which investment could lead to the wealth you've always dreamed of. In conclusion, both real estate and the stock market offer unique opportunities for wealth building, but the right choice depends on your financial goals, risk tolerance, and the amount of time and effort you're willing to invest. Real estate provides a more stable, tangible asset with the potential for passive income and long-term growth, but it requires significant upfront capital, property management, and can be impacted by market cycles and locations. Meanwhile, the stock market offers quicker liquidity and potentially higher returns, but with higher risks and greater volatility. Ultimately, becoming wealthy through either avenue requires a deep understanding of the market, strategic decision-making, and patience. It's crucial to evaluate your personal preferences, financial situation, and long-term goals when choosing between these two powerful investment options. You might even find that a balanced approach, diversifying your investments across both sectors, could be the key to building lasting wealth. The path to riches is never one size fits all, but with the right knowledge, you can choose the investment strategy that best aligns with your vision of financial freedom.